Hi, everybody. Welcome back to Mind Your Nest. I'm your host, Jennifer Rosen. And today we have another Midwesterner in studio today. I feel like I find them here in South Florida, Michigan, Minnesota, Chicago, Ohio, all the great states. His name is Jeff Lukosavich, right? I didn't botch it. Fantastic. So Jeff and I met. We both are members of a group called ESRN. I've talked about this numerous times on my podcast. It stands for Elder Service Resource Network. And we met at a small group luncheon, which I really loved, by Heidi Friedman. Held it, what was it, last month or the month before in Fort Lauderdale?
Say like in April.
So first of all, on my way there, I had, let me backtrack a little bit, and then we'll get into the story. So Jeff, as I said, is a fellow Midwesterner, so let's start there. I heard you're from Michigan.
That's correct.
Okay.
Yep. Grew up in the Detroit area of Michigan.
Oh, my gosh.
Moved down here about 13 years ago.
Okay, so were you wrapped in like fake cheese, or was green and yellow the color in your house because of you had to be a Packer fan?
Right. Detroit area, I'm more like a Lions fan.
Oh, okay.
Michigan, Wolverine fan.
Yes.
So blue and yellow.
Yes.
So you had the yellow right.
Uh-huh. Yeah. Oh, I know. Believe me, I have a younger brother that went to Michigan. I never heard the end of it.
Yeah.
Okay. All right. So what do you think about the cold weather? Were you ready to move on?
Yeah, I'm definitely a fan of warmer weather. I love living here. My wife's from Buffalo. I'm from Detroit.
Holy cow.
We're never moving back to the cold.
Oh, my God. I hope you guys sold your snowblowers at a good price.
Yeah, we got rid of the ice scrapers, the snow blowers.
Excellent.
Yeah, I mean, people ask me about the heat in Florida, and I'm like, I haven't lived here long enough to be sick of it,
Right.
and I don't have to shovel humidity. So
I know. It is a little hot, but thank God for air conditioning.
For sure.
So what made you move to Florida?
It's a long story, but
right, we have
basically,
time.
my background was engineering. I went to Wayne State, which is in Detroit, did a mechanical engineering degree. Actually hired in with Ford Motor Company out of college and worked there.
That's very impressive, by the way. I know people that have worked for some of the big auto makers, and it's a phenomenal company. If you can get into one of those, I mean, it's amazing.
And I feel like that area where I grew up, that landscape was primarily automotive. You had Ford, GM, Chrysler, all headquartered in the Detroit area. And there's suppliers. So if you had any type of engineering background or math background, strong in math, which is what led me into engineering, there were jobs aplenty.
Wow.
So I worked for Ford for 22 years. And
oh, my gosh.
as fate would have it, sometimes there's detours in life.
Yes.
Was married, 2 children up there, ended up getting a divorce, and my ex-wife moved here to South Florida, Boynton Beach. And for a couple of years, I was coming back and forth between Florida and Michigan to see the kids were going up to Michigan in the summer. But eventually that just got old. There was a lot of travel involved for both them and myself. And every time I came down and got back on the plane to go to cold Michigan, it was like, what am I doing?
Right.
It's perfect here. The only thing that's missing is me.
Yep.
So I just found a way to kind of get down here and change jobs, change careers, led me to Northwestern Mutual. So now I'm a financial advisor there. And I like to say now I'm doing financial engineering or insurance engineering.
Yep.
So
how old are your kids now?
So I do have the kids that I had from my first marriage. My daughter's 24. She lives in Tampa. And I have a son that's 22 who's going to FAU right now.
Okay, so our kids are the same age.
And then I remarried.
Yes.
Actually met my current wife. We were volunteering for Alzheimer's Association.
Wonderful.
And we met. She's younger. We ended up having a daughter 4 years ago. We have a 4-year-old daughter as well. So
fantastic.
So I like to tell my clients they don't have to worry about me retiring anytime soon. I've got a 4-year-old. I'm going to be around for a long time.
That is true, yes. And the gray hair will just keep getting grayer, but that's okay.
I like to say it's keeping me young.
Listen, something has to.
Sometimes I think it's going to kill me, but for the most part, it's keeping me young.
Yeah, being a parent won't kill you. It'll just, it's got all of its other highs and lows to it.
Brings a lot of joy to life.
It sure does. Okay, so let's talk about your transition into the insurance industry. Sure. How did that happen? And did you leave your company in Michigan and then start fresh here in Florida, or did you start planting the seeds?
Yeah, good question. So there wasn't really a way, even though I had those 22 years with Ford, there wasn't really a way to transfer down here and have like any locations down here. So I basically had to leave. I did transition to a supplier of Ford that helped pay for my relocation. And I was kind of like a sales engineer for them, but I was traveling too much. So it was like, even I did that for about a year, which allowed me to kind of parachute down to Florida.
Yep.
But it wasn't really for the long term because I was gone too much. And then I met like a friend that was a client of a Northwestern mutual advisor, and he said that he had heard that they were hiring, set up an interview in the West Palm office, and the rest, as they say, is history.
Yeah.
I mean, I did have an MBA as well as my engineering degree, so I had a little bit of a business acumen, my background. So I just believed in what they were doing. I felt like here in South Florida, everybody needs the type of services that we provide: financial advising, retirement planning, insurance planning. There's a lot of people that are small business owners, independent contractor, work for small companies. They need this type of planning. In Michigan, people don't need this type of planning, or they don't think they do because they work for a big company that provides all those benefits.
Yes, or if you stuck it out long enough with those big companies, you
Get
really...
a pension. And,
you have the benefit of that. I don't know if that benefit is, something that lives and breathes so much anymore, unless, of course, if, let's say, if you go into government jobs or academia or something like that. I want to ask you a question. So moving from such a large corporation, I mean, Ford has thousands and thousands of employees.
Yeah.
So moving from that largesse to your company now, I mean, I know that your company's national, you got thousands of employees nationwide. What was the environment like for you once you left Ford and then came to start working in the office here in Florida?
Totally different. You go from the corporate world to even being an advisor with Northwestern. You're kind of like an independent contractor. You're like a business owner. It's almost like a franchise where you just have the Northwestern name on your card, but it's really like your business.
I've heard of that. So can you talk a little bit about that? Many years ago, I was working for big companies, but I knew people that had started out with Northwestern, and their experience is exactly as you described. So can you talk about just a little bit about what that was like?
Sure. So when I made the decision to go into this field, this industry, as far as a financial advisor, I did do my due diligence. I mean, I looked around different companies, and Northwestern was, not only were they the largest as far as like in the U.S., as far as in life insurance areas, they were the largest most policy sold in the U.S., right? So the largest company. They had the best training background. They had kind of like an impeccable record as far as like reputation-wise. I feel like if people have heard of Northwestern Mutual, they've only heard good things, not bad things. So it was a transition to go into that, but I felt like if I'm going to hitch my wagons to a new team of horses, I want it to be a good team of horses.
Oh, sure.
Right? And then if I don't succeed, then it's not because I went with the wrong company. It was on me.
Yep.
But they give you all of the tools to be successful, and then it's just really hard work. Just getting out there and meeting people. And like I said, I feel like everybody needs the type of services I provide. It's just a matter of when they decide to do it and who with.
Yes.
Even if they have the wherewithal to do it themselves, they still need to do their own financial plan or retirement plan.
Oh, yeah. When a lot of times it's somewhat challenging if you are an independent person to source out the resources on your own. I believe that you need somebody to help execute those policies and plans.
For sure. As the saying goes, we don't plan to fail, but a lot of times we fail to plan.
Exactly. Right? And yes, and there are a couple other good witticisms like that, like a plan without a plan is not a plan, which I kind of like, just because you don't have to think about how many words are in there. You just keep saying plan and you'll get the jingle correct.
For sure.
Okay, so as you were starting out, I want to ask if it was similar to, like, when I moved here, I knew one person. I left the business world. I found my way to be resourceful and start networking.
Yep.
And then being thoughtful about how I was networking and really making meaningful connections, not just to say I passed out 100 business cards and all those things. Did you find it an easy process to start the networking process for yourself, and how did you go about that?
So the way you described it is exactly how I kind of grew this business, right? I'd moved from another state. I didn't know really anybody in South Florida, and I was going into a new field with not really a background in finance or sales, engineering. But I needed to meet people because it is a people business.
Yep.
So I needed to get out and meet people. And the way I did that was networking. And there are a lot of like networking type groups and activities out there, especially in this area, because like I said, it's a lot of small business owners trying to promote their business, people that want to get out there and meet more people. So that's really kind of how I grew this and scaled it, was just networking, like how we met at that networking event. And when it first started, I remember one of the networking events that I kind of had a break at. I went to a Rotary Club luncheon in Boynton.
Really? I
And
might have to check that out. Do you have to be a member?
you don't, and you
Okay.
can go as a guest,
Oh.
and it was in the Westchester Country Club. I don't even know if they still have it. This was like years ago. I mean, literally, and I was sitting with a group of gentlemen that were World War II vets. When I say that,
Fantastic.
they were talking, telling old war stories.
Yeah.
They really were old war stories. But there was the guest speaker for this luncheon was someone that worked for a home health agency. And she started talking about long-term care, the needs for long-term care, the types of services they provide, like home health aides coming into the home. And they mentioned that they take long-term care insurance. I knew that Northwestern, that was one of the options that we had as far as tools in our toolkit that we could help provide planning for. And I talked to her afterwards, got connected, and she introduced me to a lot of people in the senior living network community,
Yep.
people that work at home health, assisted livings, placement agencies, nursing homes. I started going to their events, and I became somewhat of a guru, subject matter expert. Don't want to self-appoint any titles, but I just became more of an expert in long-term care insurance. So that became a niche for me, and it allowed me to meet new people. And if anybody had any questions on long-term care plans out there, I was their go-to guy to get answers.
That's wonderful. So you got to talk to Jeff. Oh, I
Yeah.
got a guy for you.
That's exactly
Jeff
how-
is the guy.
That's exactly how it happened. And it became my niche to where it's like, okay, now people knew me, associated me with long-term care plans and solutions.
Since you've been working for Northwestern and you've been there for a long time now, I would imagine you've seen the changes with long-term care. We were talking before we went live about grandfathered plans.
Sure.
For example, Genworth is a company, and I know somebody that has a policy with them. Another one is Transamerica. So can you just briefly talk about a little bit about their traditional long-term care policies that maybe our parents and our grandparents had taken out or have had, and for those that are still alive, are still active?
Sure. Yeah, long-term care kind of got its start in like the 80s and 90s. That's when most of the policies were sold. And there were a lot of companies that offered them. Like you mentioned, Genworth, Transamerica, John Hancock, MetLife. There's a lot of those policies that are out there today. They had lifetime benefits. They had big monthly allowances attached with them. They're kind of like golden egg policies.
They really
right?
are.
I mean, and I've seen a lot of those. I mean, I'll have clients that come into my office and show me what they have and ask me for my opinion on it. What happened is that a lot of those policies were kind of like underpriced in the beginning. There wasn't enough like data, like claim data, actuarial statistics. Right. They didn't really know.
I love saying that word. Wait, hold on. I love saying that word, actuarial. Data. And I know the word, I know what it means, and I just had to say it to be a little braggadocious coming from a family of accountants and a lawyer. So
right.
There you go.
Yeah, I mean, you have to be a numbers nerd to be an actuary.
Do. Somebody's like, what's that? Is it new? Is it a new planet?
You study of birds?
It's not.
No.
Right, exactly. It's really not.
But those policies back then were kind of underpriced. And what had happened was, and a black eye for the industry is, now that there's a lot more claims because they were sold in the 80s and 90s, so people are aging into conditions where they're going to start activating those policies. Those companies are paying out benefits far in excess of what they collected in premiums.
Oh, I'm sure.
So then what they started to do was, okay, we're losing money, like hand over fist. Not that everybody feels sorry for insurance companies, but they're in business to make a profit, right? Yep. So they ended up coming up with a strategy where they appealed to insurance regulators in the states where we're going to raise premiums on policies in force so that we can stay in business for all the policies that we have out there. And those raises got approved by regulators, so people would get those increased letters in the mail, and it was either you pay an increased premium, or you lower your benefits, or you lose your policy. And it's kind of like a take it or leave it proposal. So now you have less of those companies that offer those types of plans today. There actually is less companies that sell traditional standalone long-term care policies today than there was in the 80s and 90s. And you could argue there's more of a need for that today.
Oh, absolutely.
But so many companies exited the market because it was like a losing business proposition for them.
Oh, yeah. I mean, it didn't make sense for them at all to continue having people on the streets trying to sell them to clients. Okay, so I have a couple specific questions.
Sure.
So can we talk about the traditional long-term care policy and explain the 90-day exclusionary period and then the order in which, once you start a claim, number one, do you start a claim utilizing home health care services, or do you open a claim to start home health care, then assisted living, and then skilled nursing facility? How does that order unfold once you start a claim?
Sure. So the standalone plans like today are very flexible, right? There used to be back in the day where plans that were sold were facility-based or just home health-based, where you were supposed to use it based on that type of care that you would need. And it was more of a specific exclusionary plan. You could only use it for a facility. You could only use it for home health. Today's plans you can use however you would like. So it really depends on the situation. It's a customized solution.
Okay.
So whether someone activates a plan and does it home health first, maybe then has to transition to an assisted living because they need more than they need like 24/7 care,
Yep.
and eventual nursing home. The plan goes with you, right? So you can, if you needed home health, if you stayed using it for home health the whole duration, that's fine. If you need to transition to an assisted living eventually and nursing home, that's fine as well. Most plans do have this elimination period, like you mentioned. That's typically 90 days or 12 weeks, 3 months. Every contract for each company has different wording for how they describe it. But basically what it is, the way I describe it to people, it's like a time-based deductible period, right? When you have health insurance, you think of a deductible like this is the amount that you pay before your full benefits kick in.
Right.
Car insurance, same thing, right? It's more of a dollar-based deductible. With long-term care, it's time-based, not dollar-based. The first 90 days, 3 months, 12 weeks, you're going to pay out of pocket, right? And then after that period of time, your benefits kick in. Okay? I would say it's almost as though if you're going to be better in 3 months, this is not the plan you want to activate. It's for a long-term state of being.
Okay, so let's hold on to that thought really for 1 second.
Sure.
So number one, it could be a blessing and a curse. Like you could be in that 90-day period for a bit and then never truly realize the benefit of your plan if you pass away, number one.
Right.
So you're out of pocket and then you don't get the benefit,
right,
and you're out of pocket again for the premium. So if that's the case, what you just described, then what's the next alternative for those clients?
I do explain to clients that if they're on Medicare, there is some provisions within Medicare to help pay for costs for home health, skilled nursing, rehab, those first 20 days.
If you don't have a long-term care policy.
Even if you do have a long-term care policy, that actually, if you are on Medicare and you have a long-term care, your health insurance, as in Medicare, would be a source of payment for care needs during those first 100 days.
Okay.
Beyond 100 days, Medicare doesn't pay for anything. And that's when that 12 weeks would have lapsed and your long-term care would kick in. So Medicare does provide a little bit of I'm not saying it's going to cover all the costs, but it helps offset some of the costs as opposed to being completely out of pocket for those 3 months.
Okay.
You would want to activate a claim if you had a long-term care claim, and claims get activated if you need help with 2 of the 6 activities of daily living.
Yep. Can you go through those?
Sure. I get asked a lot.
Yeah, it's important.
It's like on the top of my head.
Yes.
Bathing, dressing, toileting, transferring, eating, or continence.
Okay.
So any 2 of those 6 that you need help with, that's a physical claim, right? Or cognitive impairment. If you diagnose with any form of dementia, Alzheimer's is the most common, Parkinson's, aphasia, and you need care, not just a mild diagnosis where it's like an early diagnosis and it's mild cognitive disorder, but something where you need actual care, right?
Okay, so I have a question with that, with the mild cognitive. So obviously that diagnosis has to be given from their doctor. And are there recommendations that go along with that diagnosis to assist the patient and or the family members who are looking for care for their loved one?
I would say if they're in need of care, then a long-term care plan can help assist, even if it's like hiring someone, a home health aide for a couple hours a day.
Okay, so a part-time or something.
Can be a part-time type of service or care plan. I know people that have been diagnosed with a mild cognitive impairment. They're pretty much fully functional.
Okay.
And the way to think of the long-term care plan being activated is you do need care. It's not like they're fully functional on their own where they don't need a caregiver.
Like at any point throughout the day, are you referring to?
I would say if it's severe enough to where it's like that's not safe for them to be by themselves, right? And
Understood.
you want to have a
Okay.
caregiver close by.
Yep.
That's where it would be where the claim would get activated. I
Okay.
wouldn't, because it's a reimbursement plan. It's really reimbursing for care services that are provided. If you have a mild cognitive impairment and you're fully functional, you don't need a caregiver around you. I mean, you're pretty much fully functional. You have the diagnosis and you're starting to show some memory loss and decline, but you don't really have a caregiver that's needed. It's when it gets severe enough where you do.
I would say for this specific example that I would imagine that there are a lot of people that fall in that gray area specifically, and I've talked about this before with guests as well as when I go visit clients of mine that really have nobody here. They have no family members, they have no close friends, they have family in other states, they have friends in other states. They don't have anybody here that can really be that advocate and that voice for somebody that is experiencing cognitive decline and is maybe a little bit detached from their decline, and they really don't have as crisp of an awareness of their situation. I've had a client who falls into that category, and that is like, it's like they're stuck in a way because they have this very rich policy, but it doesn't seem like it's accessible to them because of, I guess, doing the assessment, whether or not they would pass the assessment, getting all the documentation to substantiate opening up a claim with the insurance company. And are there any remedies that can help clients like that are stuck?
Yeah, I mean, to activate a claim, it's like you had mentioned, there's an assessment that's done.
Yeah.
And it's a third-party assessment.
And can you talk briefly about that?
So typically, if someone is on the, let's say they're questioning whether or not they have a valid claim or not, it's an assessment where you basically can talk to a home health agency, and they can have a third party come out, like a nurse that will come out and actually do the assessment.
Okay.
And it's standardized form. So it's not the insurance company doing the assessment. It's
Right.
basically a standardized form. If the assessment says that you need help with 2 of the 6 ADLs, or you have that cognitive impairment where you need care, that is what would justify the claim becoming active. I do encourage people, if they think that there's a possible claim, to start the process.
Yeah.
I mean, even during the elimination period, let's just say that while they're going through that of paying for the care themselves before the benefits kick in, their premium is waived. So the very least they can get their premium waived while they're going through that. Then if the benefits kick in afterwards, and let's just say they get better. In some cases, people do get better, right?
Yeah.
I mean, there's claims that don't last till life, right? It could be something that it's a condition that lasts a year and you get better. If you have a follow-up claim down the road, you don't have to go satisfy the elimination period again. You only have to satisfy it one time.
Okay.
So I do encourage people to check into it. I think what happens a lot of what I see is people don't activate their policies right away. They wait until things get really bad before they do, because they feel like, okay, I have my spouse that can take care of me. In the meantime, I'm saving my long-term care for a rainy
when
day. And it's raining.
Yeah.
Right? So even if it's sprinkling, but it's raining, start the plan. Stop paying for it because the premium's waived, and satisfy the elimination period so that when you are going to need it extensively, it's ready to go. There's no waiting period, and you haven't paid for premiums in the meantime.
Yeah. I don't think that there's, unfortunately, for individuals that are suffering from that cognitive impairment that do not have the support.
Yeah.
And they do have these really rich plans. Right. It's like a shame.
It is. I mean, you and I both know we kind of work in the same circles.
Yeah.
There's care management companies that I would say that they would want to talk to help navigate that care plan. And even if it's something where they're not at a point where they can it's not severe enough of a cognitive impairment where maybe it would trigger a claim for their long-term care, but at least it's being tracked.
Yep.
So it's not like it's fallen off the radar completely. So I would say that to definitely work with a care manager, especially if they don't have family locally, if they don't have someone that's an advocate for them locally, have a care manager that would actually help navigate that process.
I did actually have that experience, and I had one of our friends come with me a couple of times to explain the policy and had a conversation about actually starting a claim. And the disorientation and the disconnect from what we were talking about and what the facts were, policy and how it could help her were lost in thin air. And so it would be nice if we could help everybody who really needs it or could benefit from their policy that they took out intelligently many years ago. They had the foresight to say, hey, or when her husband was alive, that took out these policies. So that is a shame. When you're aging in a way that you're aging and suffering privately, and the opportunity to be helped is missed because you're alone and you have no support, which is unfortunate. I would imagine you would agree that it's just part of the industry that we're in.
And I mean, we're not from Florida, right?
Yeah.
I'm from Michigan. I feel like there's a lot of, you can almost go up to most people on the street and say, where are you from and how long have you lived here? So it's a very transient area where we live. There's a lot of people that have family in other places, right? So it is kind of like you can't necessarily rely on family to take care of you, which is even another reason why I say people should look into like long-term care planning, because that provides assistance where maybe the family's not around to provide that, right?
Oh, absolutely.
But yes, I agree with you. It's one of those where you almost need to have your fingertips on resources to help you. I've spoke with many widows, spouses that their husband or wife took out the plan and now they're no longer around. They don't even know what they have. Right. So literally I try to be an advocate to where, hey, if you have any questions or anything, just call me. It's not like necessarily did I help you with the original plan, but if you need help trying to navigate any terms of it, I've sat down with people just to go over their existing plan, try to point out, educate them. I feel like this is the one area of what I do that people know the least amount about.
I absolutely agree with you. I want to talk about something that actually you, Janine, and I were talking about. When we talk about our family and growing up, and let's say if you come from a Jewish family, a big Italian family, a European family, or another family that they all helped each other out.
Sure.
Whether families traditionally lived in like a 4-flat and each generation had their own floor. And I do find that, I mean, obviously being a transplant myself, moving to Florida 3.5 years ago, I didn't move away from anybody. I moved to a new place. I believe you get one chance around the sun. I wanted to be here.
Sure.
So my mom, my brothers, my friends, my daughter's heading back to Chicago next week. My son is here. There are a lot of people that are now somewhat transient. You described, we're all over the place.
Sure.
We don't get old in that 4-flat anymore. I mean, not everybody. There are a lot of families that still do, and they do take care of each other, the next generation. So I do find that the importance of having resources and people in your life that can help you plan here in Florida specifically is so important because of how many people come here from other places to start their life or to continue on their life in a beautiful climate. And it is nice to know that there are options. But like I said, sometimes it does feel a little isolating when, let's say, you're used to making those decisions with your family, and now you're kind of having to make it on your own with an advisor such as yourself.
And I would say one of the nice things about where we live, there are a lot of like services out there.
Yes.
There's a lot. I mean, people like to think Florida's retirement capital of the U.S. I mean, there's a lot of people that move here, but a lot of those services have popped up. There are resources available. And when I'm even suggesting a long-term care plan for someone and they're saying, well, I have family, even close by, like let's just say the kids live close by. Economically, financially speaking, most cases now, you're talking families, both husband and wife work. And taking care of their aging parents is almost like a full-time job in and of itself. Yeah. So even having a plan where you do have family, that is a support system around you, it allows your family to bring in some aides to help them take care of their parents. even if it's during the workday,
Yep.
or when times when they have to take care of their own kids and they're not able to do both. So it's really about not just like basically washing the hands of family taking care of someone. It's allowing them to enlist aid, and even spouses allowing them to enlist aid, to bring in aides to help, because the stress and burden of taking care of a sick spouse on the healthy spouse, those statistics are staggering.
Oh, yes.
How the healthy spouse health declines even more rapidly than the one that's sick. So it's really about having a care plan around that event where it's not just relying on family to take care of you.
I have to say that, and I probably wasn't so aware when I was growing up, was younger, whatever, working, saw my grandparents' age, saw my parents' age, but didn't really know the intricacies of multiple generations of families
Sure.
aging and what that really meant in terms of putting stress on the family.
Right.
I watched my grandparents age. Some passed away sooner than the others. Others passed away. They were in a facility. But I would have to say that the mentality, maybe it's not really the mentality, the like warmth and love and the way I heard conversations was much different than how we talk about our aging population today.
Sure.
I don't know, maybe it's because I'm older, I have kids, my mother's still alive at 85. I definitely feel much more uplifted and inspired ever since I moved here, being around the older population. Even the people such as myself that are aging and might really have some limitations on them, I find the mindset much more hopeful. I don't know if it's the sun, the water, the palm trees, I'm not really sure.
Yeah.
But I don't feel that there's shame or embarrassment when you hear people talking about aging and thinking about long term.
Correct. Yeah, I think we live in a beautiful area for that. I mean, not just because of the palm trees and the sunshine, but there's just a lot of resources. A lot of people are like-minded, like yourself. And we're living longer. I mean, statistically speaking, I work for a life insurance company, right? Statistics show that people live longer now than they did before.
Yeah.
So it's more like they want to have some quality of life, and where else better to receive it than here in South Florida? So we're very fortunate.
I am not surprised, but you don't really know how much support and services and compassionate, authentic people there are in this environment working with the aging population. I think until you actually walk into a meeting or meet other people that
100%,
really want to help. What have you had any experience since you've been working with Northwestern, as you've gone through, where you come across people that aren't as authentic and honest as you, nefarious companies or individuals that are really trying to put one over on that population?
What I noticed going to networking events and where long-term care became kind of like a niche part of my business was I met a lot of really good, genuine people. Like they have a heart for seniors. They have a heart for people in general. I don't think people work in this industry because they want to make a lot of money. They have more of a heart. Not to say there aren't people that are successful, but they more have a heart for the people that they're overseeing, that they're taking care of, they're advising. And when I would go to a lot of those networking events, I really didn't run into very many financial advisors or insurance agents from other companies.
Really?
Which was kind of strange for me because most people that work in that industry, whether it's home health, assisted living, they're advocates of people having long-term care plans because that helps pay for their services. It gives families options on what they can do, but more so than if they're trying to pay for everything out of pocket. So they're fans of that type of insurance especially. And there wasn't really any other agents that were going to those networking events at the time when I was attending. So it kind of felt like there was not a lot of competition or people that were like used nefarious tactics as far as so I really felt like this is my calling. This was where I was meant to be at this time in my life. And I felt like I was serving a purpose because I became an expert at it and I wasn't like a jerk when I was meeting with people. Then it was like,
well, you're from the Midwest, so that automatically...
Yeah, right. Exactly. I like to say that too.
Yes.
When you meet somebody from the Midwest, you know how the conversation's going to go.
Exactly. But listen, to my New Yorker friends and my East Coast people, I went to school on the East Coast, so this isn't a slight at you. I'm just poking fun.
No, and I have a lot of clients that are from the Northeast too. You have to be a chameleon sometimes, and it's like you adjust your tone, your style more direct to the chase.
That's exactly right.
But I would say this, it was more of I felt like this was my calling. This was where I was meant to be. And this was an area that I was supposed to get more knowledgeable in so I could help more people. And there wasn't a lot of people that were doing the same thing that I was doing. Even within Northwestern, there really wasn't.
I find that so interesting.
Yeah.
I mean, really, there's nothing that you didn't really run into yourself walking into different rooms. And you know what's interesting too, now that you say that, I haven't walked into anybody who does what I do when I walk into those rooms either.
Yeah.
That goes into the home and helps people with their day-to-day money matters. It's very interesting.
Sure.
I mean, you can find people, home health aides and people that work in elder law and a whole host of other services. Right. But I think it's great that we're kind of not really an anomaly, but kind of.
But
you know
unique,
what I mean?
unique in our own right.
No, I agree. Personalities and socks included. Okay, so let's say you have a potential client that's my age or a little bit younger. I don't know if you would even entertain a conversation with like early 20-somethings. Is it ever too early to start talking about long-term care planning?
I do financial planning and retirement planning as well. So it's not like I only do long-term care, but I do feel like it's part of everybody's financial plan. I like to refer to long-term care insurance as like retirement insurance. It really protects your nest egg. So if we're putting a plan together, you want to insure the plan, right? There's not really too young of an age to start talking about it, especially if you're dealing with younger people that are taking care of parents. I mean, I feel like if somebody's taking care of an aging loved one, then they're aware of how costly it can be and the fact that it's basically out-of-pocket costs. There are different plans out there. Everything's customized, right? There's not a one-size-that-fits-all. So usually I'll sit down with someone or a couple and we'll go through like where they're at as far as like get a kind of snapshot of their current financial landscape, what they're looking to achieve. But there are different types of product solutions out there. So there's not just the standalone plans like you'd mentioned before, but there are also hybrid plans now, and that's kind of like the new trend in the industry, where it's life insurance with long-term care riders. So if we're coming up with a life insurance plan for a couple, then we focus on an appropriate death benefit. But if they need it for care, basically now they're taking money out of the life insurance policy to pay for care, as opposed to a standalone plan.
When I was getting divorced, my ex-husband and I were required to take out term life insurance plans until I think our kids turned 18. And I know what type of plan I have, and it is that hybrid plan that there's a life insurance benefit to it. And I get a statement, I think, that shows like what the benefits are. There's like a sliding scale or something. To be honest, I really don't pay attention to it. I just pay the premium and feel grateful that my premium hasn't changed since I think 2018 is when I took out the policy, which is pretty impressive. I actually spoke with my broker yesterday, good Chicago guy.
Okay.
So can you, a little bit in detail, describe how that hybrid plan works?
Sure. So there's two basic types of life insurance, right? Term, like you mentioned, which is kind of like a rental plan.
Correct.
As I like to say, it's like you get a 20-year term. It's like a 20-year lease. It's a roof over your head. You're protected, but there's nothing to show for it.
Joe Namath is on the commercial. He says $2 a week, and I get $2 million. So
there you go.
I'm going to sign up.
And those plans are great. Yeah. You're covered. Your family's protected. Then there's permanent life insurance, which is more like you own the policy.
Is that an annuity?
It's not an annuity. It's still an insurance plan. Okay. So it doesn't provide like an income payment like an annuity does. But it basically provides the same type of coverage as a term. But now, as you're paying into this plan, you're building up equity within the policy.
Okay.
So there's cash value down the road. Those types of plans now, today, there's lots of different iterations out there with different companies, but there's riders and attachments to those plans where now you have a long-term care provision so that, like, say you have $1 million policy, right? That's the death benefit. If you have a care, event that happens, that physical or cognitive, now you're taking money out of that $1 million, like tax-free, almost like an advance on the death benefit to pay for care.
Got it.
And let's say you need $400,000 of care, right, over the course of your event, and then you pass away, right? You took $400,000 out of that $1 million. There's still $600,000 left for your beneficiaries.
Got it.
So just one way or another, the policy is going to pay out. If you never have a care event, then you still have a full $1 million policy. A term policy might have expired before you passed away, but the permanent policy stays in place. It's just if you need to access it for care, you can ahead of obviously passing away. But people like those types of plans now because one way or another, it's going to pay. The standalone plans, it's insurance, so You need to have an event to happen for it to pay out. If nothing happens, then those policies were not utilized. You don't want to have a claim. I like to say it's the umbrella that you buy when it's sunny out. You don't need it today. If it starts raining, and hopefully it doesn't, right, then you don't have anything to show for it, but you were protected in case it did.
In that situation that you need to access, you need to utilize $400,000 of that $1 million policy. Is there ever a time where you can replenish so that you can bring that life insurance policy back up to $1 million?
Because it's permanent life insurance, it has like a dividends that you get from the company that help basically grow the policy. So it is actually still growing even if you're taking money out.
Got it.
I would just say it's almost like a Swiss Army knife, right? There's a death benefit. Obviously, that's how it's structured. There's cash value that you can take out for anything, necessarily a care event, but you just need access to capital. You have it that way. It's flexible. And then if you need it for care, you're taking it out for long-term care. So there's multiple ways you can use it. It's very flexible. I would say if you need to replenish, just count on the dividends to keep replenishing it.
I meant like wanting to replenish, like for your beneficiaries. Let's say your beneficiaries are younger and you had an event that you needed to access, but there's still plenty of life left in you, as well as your kids are under 18 or under 22.
I would say that those types of plans, what they preserve, whether if you start using it for care, and it's obviously lowering the death benefit, but it preserves you taking that out of the rest of your retirement or your portfolio, your assets. That is to me, the number one reason why you would have these types of plans is you're not draining your retirement plan too soon or the inheritance of what you might be handing down to your kids. You're preserving that by using this pool that's set aside for long-term care wrapped in your life insurance policy.
Got it.
And you could go through that first and preserve what else you have that you could be handing out. It wouldn't be like you would be able to boost it back up.
Got it. Okay. That makes sense. Okay, and finally, I do have one question because that you mentioned it when you were talking about utilizing some of those funds. It almost sounded like if it was a non-medical event or a non-care event that you could take some of those funds out. Or was I incorrect in understanding that?
So with permanent life insurance, you have cash value in the policies, right? So it can be a non-medical event. I have clients that use life insurance proceeds, the cash value in life insurance, for investment opportunities.
Do they use it or can they use it for like how people take out a HELOC?
It's even better than a HELOC because you don't have to go through a loan approval process. It's liquid and it's available right away. So I had a conversation with a client yesterday. He's in between jobs and he wanted to take a HELOC out on his home. He's got $700,000 in equity because he's currently unemployed. He could not take out a HELOC, even though he had access, even though he's got the equity in the home because he doesn't income coming in.
Interesting.
He wasn't approved for the HELOC. Life insurance, it's instant access.
How do you know what the available amount is if you needed access?
So, obviously, it's built up over time, but as it's growing, you're working with your agent. I mean, you'll be able to see online what the amount is, and it's a factor of what you've put in over time plus dividends. Or if you're working with an agent, they can advise you what's available. But I mean, for people that call me up, and an example is like during COVID, when in March and April of 2020. When the market crashed, people didn't want to take money out of their 401ks because the market was down. I mean, that's the worst time to liquidate 401k funds.
You got to stay for the long term.
You just wanted to wait until things bounce back. Yeah. Well, you can access your permanent life insurance because that is not affected by the market. It's not market correlated. And for 2-3 months, you can take money out of that as a reserve against the 401k. Let the 401k bounce back, which it did in July. Yeah. And now you're back to the original plan. So,
are you required to pay that back?
No.
Is there a penalty for taking it out?
There's interest with taking it out, but the way permanent life insurance works is the interest accrues with the loan balance, and if you don't pay it back, they basically subtract the balance plus interest from your death benefit when you pass. And your death benefit's more or less like collateral for that loan amount.
And are there any tax consequences for taking out those funds?
No, because if you take it out as a loan, that doesn't trigger a taxable event.
Okay, but does it trigger a repayment, a required repayment?
Nope. Your death benefit is like because it's a permanent life insurance policy. So it's going to pay eventually. And statistically, we've proven no one gets out of here alive.
That's
right?
exactly.
The two
People
things,
have tried to convince me otherwise, but it really.
the two things certain in life, death and taxes.
That's
right?
exactly right. Exactly.
But because the death benefit's collateral, you don't have to pay it back.
Okay.
Right?
Interesting. I always find when there are these either caveats or carve-outs or like these, like, oh, we could do this and this. My old ways, my like upbringing just kind of closes me off to those little things because I know that there are a lot of people out there that need immediate access of funds because they're either in credit card debt or they have a financial situation that they need help resolving in a very quick time period.
Right.
Okay. I think that's really it in terms of my questions regarding long-term care. You're very smart and knowledgeable. And
Thank you. I appreciate that. I try to be.
It's the truth. I mean, these are topics, as I said to you before we started talking, nobody wants to talk about insurance or talk about accounting or needing a lawyer, but these services are so incredibly valuable.
Yeah.
And I agree that you can never start talking about the planning process too early. And I would say that even my young 20-somethings are open to having conversations about that. The reality of the need of it is hard to look at when you're looking in the future. But I think that the basic understanding and concept of planning is really important to help educating people.
You don't want to wait until it's too late to talk about it. And that's part of my mission is coming on podcasts. So thank you for having me. But
thank you for being here.
Giving presentations and talks about these types of solutions and plans that are out there. I feel like people don't have as much knowledge in this area.
They don't.
And they really do, just from a standpoint of planning ahead and making sure that they have access to the resources that are out there. They don't want to wait until it's too late.
Yeah.
So I feel like it's definitely a must for anybody. I mean, everybody needs to have some type of plan, right?
Yep.
And there's a lot of different options out there. The one thing, the rebuttal I get as well is too expensive or I waited too long to do it. There are so many different types of solutions. Really just sit down with someone that's well-versed in the solutions out there, and you can probably find something that will definitely help you.
Yeah. No, I completely agree, and don't be afraid to pick up the phone or call somebody or find somebody that might be able to find somebody for you. And everybody, just remember, it's never too early to plan. You think you don't have to put it on your to-do list, and you keep pushing it back and pushing it back. Whenever you're ready to do things that are a must on your to-do list, are getting your affairs in order, talking to somebody about long-term care, getting a living will, having an advance directive, making sure that people know what you want in case of the inevitable, and making sure you talk to somebody that can help clarify and communicate your needs for you. There are plenty of people out here in South Florida that can help, and we all are warm and fuzzy, and we're all here to help. Jeff, we're going to post your contact information on the show notes, but for right now, everybody take a paper and pen, and Jeff is going to give you his information on how to contact him.
Sounds great. So for those who want to reach out, my number is 561-846-2394.
And what about your email address?
So that is a little bit longer.
Okay. We have a minute.
Jeffrey, Jeffrey, .Lukosavich, LUKOSAVICH @nm.com.
Thank you.
Either way.
All right, everybody. Jeff, thank you so much. I appreciate you coming on. You are a wealth of information, and I hope you have a great rest of the day. And to everybody listening today, I hope you have a great rest of the day, and don't forget to mind your nest.